And we're back to the funnest, greatest channel where we talk about everything U.S. markets, U.S. headlines. We're going to go into some, not only the headlines, but also we're going to do some of the technical analysis. We'll talk about some of the chart patterns. We'll talk about some of the indicators, how to use them, what they do. We'll also go into some of the fundamental analysis, earnings, and things like that. Yeah, it'll be fun. We can even do some of the we'll even talk about some of the forecasts as well. So let's get right into it. Yeah, some of the headlines for today. Meta and AMD announced a 6 gigawatt GPU deal as part of an AI build out. Yeah, that's going to be exciting coming up. And we'll also talk about how IBM has the worst day since 2000. We'll also talk about how Amazon is spending $12 billion in Louisiana alone on AI data centers. And we'll talk about how Mr. T is trying to get the executives to cover costs for the data centers. Will it work? Will it not? Right? And we'll also talk about a little bit about SpaceX, the IPO, and then a little bit about Tesla. Mr. Musk is always in the news. A little bit of the headlines about Home Depot, as well as AI robots and how they will affect the job markets in the future. If there's more AI robots than there are workers, what's it going to do for us, right? So all that's coming up. It's going to be exciting. Hang on, let's go. Again, we promise not to be a boring channel, but yeah, for instance, Meta and AMD announced a 6 gigawatt GPU deal. Let's take a look at this one. So they announced a multi-year agreement that will see Meta purchase upwards of 6 gigawatts worth of AI chips as part of its massive AI build-out. As part of a deal announced Tuesday, will issue Meta 160 million shares of common stock that will invest a series of tranches if AMD hits certain milestones, the first of which will hit when AMD ships its first 1 gigawatt of chips. AMD shares jumped as much as 10% in pre-market trading on Tuesday. Yes. Wow. Let's see. And then we expect this partnership to drive substantial multi-year revenue. The performance-based structure also tightly aligns AMD and Meta around execution and long-term value creation. The first GPUs, AMD's M1 450 line, will be deployed in the company's data centers. Meta says it will also purchase a large additional CPUs, including AMD's Venice chip and its next generation Verano processor. CPUs are becoming an increasingly important component for AI data centers as companies look towards running agentic AI services and focus on inference or running models. Last week, Meta announced a separate multi-year agreement with AMD, rival NVIDIA, that will see the chipmaker provide Meta with millions of Blackwell and Rubin GPUs. Yeah. So Meta's agreement with AMD comes as the company is set to spend upwards of 135 billion. That's a B as in billion in capital expenditures throughout 2026 as part of its AI expansion plans. They will pay for everything from data center construction and chips to training models. Yeah. Meta isn't the only company spending big on AI this year. Meta, Amazon, and Google and Microsoft plan to collectively spend some 650 billion on AI. Wow. That's given some inventors pause as they digest whether the investments will actually bear the fruit. Yeah, will it actually bear the fruit, or is it just a big black hole of money? Google stock has dropped 8.7% since its own news, while Amazon has fallen 11.9%. Microsoft, however, has been hammered the most since revealing its spending strategy, declining 15.5%. So chip stocks haven't done too much better. Wall Street has cooled on the red-hot companies amid continued questions of an AI bubble and fears that custom chips built by Amazon, Google, Meta, and Microsoft could pose a threat to GPU supremacy in the data center. Yeah. Um, so that's interesting. So let's do this. Before we go on, let's take a look here at Meta and AMD. Dun, dun, dun. Ba, ba, ba. That's AMD. Yeah. Meta has signed a 5-year deal to buy AMD's MI450 chips for its data centers, starting with 1 gigawatt this year and totaling 6 gigawatts with delivery in late 2026. So, yeah, just to take a look at this a little bit, just a brief introduction for those of you who have been on this channel before. You already know this. Here we have this, we have this. Let me introduce you to the RSI first. RSI is the relative strength index. That's the RSI, and basically 70 line and 30 line represent the high side and low side. Let's say it like that. I don't say overbought and oversold because they can always go way above being bought and way above being sold before they ever actually market change. So that's why I don't like to use those words. And then also, for example, you have the right in here. I want to draw this out for you as well. For example, right about here between 57 and about 45. Right here, this is what we call the neutral, or around 45 to 55. That's a very neutral part. And again, I use those words and numbers with a lot of generality. So for example, here, if you were to take a look at right here, the RSI here, the RSI is sitting here at about 81, 82. 81, 82 is pretty overbought, but hey, again, what could happen easily is this could just go like that, and this could continue to go up. Just because it's overbought doesn't mean it's going to market correct and come down, so just be aware of that. And yeah, this is AMD because AMD just got the big deal. And look right here, if you see, put this back on my arrow. We also have, let me tell you about the MACD, the moving, let me spell that right, moving average convergence divergence. That's the MACD. And basically what you want to look for here is like when the blue MACD line crosses the red signal line. Okay, so what do I mean by that? So for example, right here you see how it starts to go down, and the MACD line right here starts to go down too. And the MACD is generally a little bit lagging. As you can see, it doesn't quite cross the line at the exact moment it goes down. So bear that in mind. It does have its weaknesses. Also, if you look right here, the blue line crosses going up, so there's going to be an upward chart pattern here. Now again, this is lagging. It should have been going up earlier, but that's just the MACD for you. Okay, so that's the MACD. That's the RSI. We'll get into more of the specifics later on, but I just wanted to show you that. And now let me give you some chart patterns on this one too. So for example, a couple quick ones that jump out at me. I have mine on 1 minute because it's easier to see some of the patterns that way. I can always change it later. But here's an easy one. Here's a double bottom. Here's two bottoms. And here is the neckline on that double bottom. And if you go, let me highlight this for you right here, right there. And I'll explain. This is the, type this, double bottom with neckline, but no real breakout. Okay, so you see the neckline, but it doesn't really break out. So it's the double bottom, no real breakout. Normally, on a double bottom, you should see, if it does break out, it'll go like that. It'll go up, but it doesn't really go up. So just bear that in mind. What I want to show you next is a good one right here. This is you see this head right here. You see the left shoulder right here. You see the right shoulder right here. And then so this is what we call the neckline, okay? Let me highlight that one for you. Rectangle right here, that's the neckline. So this is what we call a, let me type this. This is what we call the head and shoulders with neckline and breakout going down. So you can see how it breaks out and goes down after the neckline, right? That's that. Yeah. And yeah, that's it. The head and shoulders is often a very common one, just like the double bottom or double top. For example, here you can see another one right here. Let me show you this one. Here's your diagonal neckline right there. Here's your reverse head. So here you have a diagonal neckline and a reverse. This is the reverse head and shoulders. But here there's a very little breakout. Very little breakout. So again, I just want to show you the patterns so you can recognize them. But oftentimes they don't really have a breakout, but you can recognize the patterns anyway. Yeah, so hopefully that's a little bit helpful. Yeah, here's also another one if you want to see. Here we go. Basically, here is your. If I can show you this one here. Here's your neckline right here. Here's your head. And then here's your breakout. So right there's your head and shoulders. So this is the head and shoulders with neckline and the breakout. It does, so you can see it breaks out and goes down, right? So that's what I mean about the breakout and going down. And then if we go over here, yeah. So that's that. We talked a little bit about the RSI, talked a little bit about the MACD, and then we got some chart patterns. So that was very successful. So again, this is advanced macro devices. For just a little intro about macro devices, they engage in semiconductor business. Its products include processors, accelerators, graphics, adaptives, and software tools. And let's take a look here just to give you. There you can see their stock is jumping up, right? They just signed a 5-year deal with Meta, oh, this is something else I should show you. For example, right here, you see how these volume sticks. There's more volume sticks when there's a lot more trading because it's going up. The same thing if it's going. You see how the chart here goes down. There's more volume when it goes down too. Anytime there's a change in the price chart, you'll have more volume. Yeah. And then so volume right now is at 28.1 million. Market cap is at 320 billion. And let's take a look here about the earnings. Earnings wise, Q4 beat expectations. Expectations, that just basically means what the Wall Street analysts think a company will or won't do. And for example, if it meets the expectations, that's good. It means it's strong. But if it surpasses expectations, that probably means the stock, will go up, stuff like that, because it did more than what they was expected to do. Q3, same thing, beat expectations. Q2 also beat expectations. But what's more important, oftentimes, is to look at this annually. Annually, what's this thing going to do? 2025, yeah. As a year, it beat expectations. 2024, it met the expectations. 2023, it also met expectations. So this looks good because why? Because this tells you that the last 3 years it either surpassed expectations or it met the expectations. So that's looking good as far as the earnings are concerned. So let's go here to statements. Statements right here. You want to put that on annual. And then for the last 2 years, let's look at 2024 and 2025 first. The last 2 years, revenue, gross profit, operating income, they're all in the green, right? As well as net income, all in the green in the last 2 years. But if we go to 2023, everything is in the red for 2023 except for gross profit. So bear that in mind. 2024 and 2025 were much better, yeah. And if you want, just for kicks and grins, you can take a look here at the forecast. Boom, boom, boom. Forecast. 48 analysts offering a 1-year price forecast have a max estimate of 365 and a minimum estimate of 210. So again, who are these analysts and what do they know? That's why I don't put a lot of stock into it, but it's always fun to look at it sometimes. So that's AMD. Let's go here to Meta, since Meta is also part of this deal. Meta. Yeah. So here is Meta. Let's take a look here at Meta. Goldman Sachs noted that Meta platforms will play a crucial role in a projected $1.5 trillion investment in AI infrastructure from 2023 to 2026, up from 600 billion. Yeah. So let's take a look at that. Yeah, what do we got here? RSI right now is, let me refresh this. Okay, here we go. Yeah, so looking at this, let's take a look here. What's the RSI doing? RSI is sitting here at super 54. 54 is 54 is very neutral. So keeping that in mind, and as you can see right there, it reflects in the price. It's kind of stable right now, sitting right there at about 637. And yeah, if you look at the MACD right now just crossed. Sorry about that. If you look at this, the MACD just crossed the signal line going up, which also represents the price chart. It's going up right there. And oh, look at this in real time. What just happened here? The RSI just went down. Yeah, okay. So Meta just dropped. So let me erase this. Oh my God, it just, this is what I mean. Things can change in a second. It went from going up to just going straight down. Look at this. Call that a market correction, right? Holy moly. So look at this. The RSI, that's why I say the RSI can go very low or very high. So don't pay too much attention to the numbers. So right now it just dropped down to 23. That's what we call a market correction right there. And look at all this volume, the sales volume, because it just went down. Dang, it's going down farther. Okay, right there at 17. Yes. So yeah, and the MACD also just went bang. It went up and then crash. It came back down, just like that. That's why I say, again, these things are just guides. I wouldn't even look at these parameters too much. The 70 line, the 30 line, no, they can go way overbought, way oversold. They can stay that way for a long time before they actually really correct. So here's one. Take a look at this right here. This is what we call, where is it, 37, yeah. So you can see right here, 55 down here. It's pretty much stabilized right there, as you can see in the price chart. Right there, it doesn't really go up, doesn't really go down, and then bang, it corrects and goes down. Yeah. So let's look at, that's interesting. But yeah, it recently just did the same thing. If you look down here, boom, 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 right here, it did the same thing there, 19. So again, Meta can just go up and go down very quickly and easily. Let's see. Can I give you some patterns here? Oh, here's a good one. Oh, sorry. Let me give you some chart patterns here real quick. Here's the double. Here's the easy one to see. A double top right there. Bang, bang. You see, it has basically the same plane right there. And then here is your neckline. That's your neckline. And you see, it doesn't really break out much, but it does break out just a little bit. So that's a double top. Double top right there. Let me write that for you. It's a double top with a small breakout from the neckline. Yeah, small breakout from the neckline. And then let me see here. Dun, dun, dun. Let's go over here. We talked about a double top. Here is a here's another. For example, we talked about the double bottoms. Here's a double bottom right there, double bottom, and then here's your neckline right there. So it does break out a little bit right there from the neckline. Yeah, double bottom. There's your neckline. Yeah, so I can type that one for you too. So double bottom with neckline and small breakout. Doesn't break out much, just a little bit. Yeah, there's that. Dun 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 dun. What else? Let's see. Can I give you a? Oh, here's one. Basically, yeah, it's easier to see here. This is what we refer to as kind of a. Here's your head, left side, right side, and here's your neckline. So again, and then here's your breakout. Okay, so that's your reverse head and shoulders with the neckline breakout right there. Yeah. So again, I hope that gives you a little bit of an idea of what's going on there with the chart patterns. Hopefully it's a little bit fun and interesting for you. Again, let's see. But yeah, let's go back here to the beginning stage. Reverse head and shoulders there. What else did we show you? Yeah, you can see a lot of these reverse head and shoulders. Sometimes they don't even break out, and it's sometimes if you change the time range. For example, let's go to 1 week. You can see some of the bigger patterns. For example, if you change it to 1 week, you can kind of see, for example, now you can see this one. It's a bigger one, but with 1 week, here's this bottom part, here's the left side, and here's kind of the right side. And this is the neckline, and this is the yeah, look at that right there. Boom. So what does that look like to you? It looks almost like a reverse head and shoulders, right? And you can see that leading up to the climb. But you wouldn't see that necessarily as much if you had it on the 1 minute. You know what I mean? It would be harder to see, because you when you change the time, you can also change some of the visibility of stuff. So there's 1 minute, and then put this back to 1 week, and then all of a sudden that becomes easier to see, right? So that's why sometimes you change the time on certain things. The things you can see on 1 week, you cannot see on 1 minute, and vice versa. Yeah. So there's that. Now let's take a look over here at some of the. Yeah, here's another. If you can see this. Again, so you see these other patterns. Like here's the reverse head, left shoulder, right shoulder, and here's the neckline right there, and boom, boom, right there. So now let's go back here to some of the fundamentals. Let's talk about what's going to happen. Volume wise is at 420,000. Market cap is at 1.6 trillion. Let's change this back to 1 minute, and then I can go here. You see how when there's not much happening, like right here, the volume is down. The volume is down, but when there's more happening, the volume is up. You see those volume bars? So right now, that's why if you look at the volume, it's at 421,000. Market cap is at 1.6 trillion. And if you go here to the earnings, this is the fundamental side. Let's take a look at this. Earnings side Q4. Yeah, definitely surpassed expectations. Q3 it missed it, but Q2 it definitely surpassed it. So click the annual button and you'll see that year over year, 2025, yeah, it surpassed expectations. 2024, yes, surpassed it. 2023, yes, surpassed it. So even though it had a couple bad quarters, yearly it surpassed earnings expectations. Now, that's the expectations that Wall Street puts out for the company, and basically when it does more than expected, that's oftentimes a good sign, and then they'll increase the value of the stock, stuff like that. If you go here to statements, click on the annual side right there. Revenue, gross profit, operating income, the last 3 years were all good in the green. Net income was good in the green for 2023, but not 2023 and 2024, but not 2025. That's the only difference there on that one. So, bearing that in mind, let's keep going here. Meta and AMD, we've covered that, and then for example, we talk about IBM having a bad day right now. IBM, let's see, stock plunged 13% in its biggest single day percentage loss since October. Yeah. With decline, IBM shares have fallen 27% in February, on track for its biggest 1 month slide since at least 1968. Yeah. And then, so let's take a look here at IBM. IBM right there. Look right here. So yeah, this is on TradingView, a little news update. IBM stock fell 13.2% on Monday, its worst drop since 2000, losing $22 billion in market value amid concerns over Anthropic's tool for COBOL system, contributing to a 25% decline this year. Yeah. So again, what do you kind of see here? Let's chart this out. Yeah. So for example, right here, your RSI is already overbought. You see how IBM. Let's do this. Let's put this to 1 day. Let's see what happens. Yeah. So if you do that, you can see how kind of yeah. If you do it over 1 day, you can see bang. Look at that. It just dropped. That's the drop it's talking about right there. That's why I say sometimes you can change the timing. What you see in a day will change from what you see in a minute, and vice versa. Change it to a week, stuff like that. This depends on what you want to see. Now, if you look here at the RSI, you see the RSI went down. It's already started to correct a little bit, and that matches also. You see this green candle here, and so it's already correcting. Also, I wanted to point this out to you. 1 day, rectangle. So right here, you see this is pretty much kind of neutral. That's also what we call the consolidation or continuation. Right there, consolidation, continuation. And you see that reflected in the chart as well. Yeah. So yeah, you see some consolidation, continuation right there. and you see it reflected in the RSI. Those kind of match up. That's kind of actually interesting. Yeah. Now let's go over here. Bum, bum, bum. Let's look at if we look here at the MACD. The MACD will also show you. Well, let's take a look at the chart patterns first. What we can see on a 1 day is different than what we can see in a week. Let's plot this out. Let's change this to 1 minute. Let's see what we see. Yeah, see when you change it to 1 minute, the whole graph looks different, right? And as you can see right now, look at this. The RSI 1 minute completely changed, right? Let's put this back over here to 1 day. Let's see what happens. Yes, see that? Looks different. So you always have to pay attention to the time. Now let's see. If you go to 1 day, let's see. 1 week, 1 hour, 1 what? Let's see. Yeah. For example, here, this is a good example of a double bottom, boom, right here, and it does break out and go up. So there's that. Let me show you that. It's a nice little double bottom. Here's your neckline right there. Yeah, so a double bottom breaks out and goes up. Yeah, they don't always break out and go up, but it's nice to see it sometimes when it does. Again, if you look right here, you can kind of see the remnants of here. This is a better one. You have the you can kind of see it better here. Here's your head, here's your left side, here's your right side, and this is basically your neckline right there. So let me highlight this for you. Yeah, there's your reverse head and shoulders. Let me type that better. Reverse head and shoulders. And you see the diagonal neckline and a small the breakout, right? And then what you want to see next is the same thing in reverse. So they oftentimes correct each other. There's the reverse head and shoulders. Here's the other head and shoulders, right? Here's the left, here's the right. And this is a very easy one to see. There's the neckline right there. So this one is much easier to see. So look at that. Back to back head and shoulders. So you got one head and shoulders one way, and then you got to reverse the other way. Yeah. So it's always very interesting to see how that. Sometimes it's just like sometimes the double bottom and the double top, they'll cancel each other out too. But yeah, that's a nice one to be able to show you right there. If you have other questions about other chart patterns, just put those in the comments. Always nice to see that. Let me show you some other ones. Well, let's go on. That's enough for now. IBM, if we go over here, dun, IBM. Let's put this back on 1 minute. You see how everything changes. Put this back on. Let's try 1 day. See what happens. 1 day. Yeah, right there. And you see how the volume kind of spikes. The volume spikes when there's more trading, when there's more price change. Even right here, you see the volume spikes. So volume, see at 892,000. Market cap is 219 billion. And earnings wise, let's go here to earnings. Earnings quarterly Q4 is did better than expected. Q3 also better than Q2, also better than expected. But annually is more important. What did it do in 2025? 2025, it actually did. The earnings were better than expected in 2025. Same thing in 2024, better than expected. 2023 also better than expected. So again, despite a bad quarter or two, year over year, the earnings were better than And so that's earnings. Looking here at statements, hit the annual button right there. And let's go to the last 3 years. Last 3 years, if you look at revenue, gross profit, operating income, and net income, yeah, it's interesting. Um, yeah, 2023 was really good for all the revenue, gross profit, operating income, and net income. But 2024 was good for everything, but not good for net income. Yeah, and 2025, good for everything, but not good for operating income. So it depends on which one is more important to you, how you make your decisions with the companies, etc. But there's the data for you. Yeah, let's keep going here. We got some interesting stuff. So that's Meta, that's IBM, and Amazon. I wanted to show you this, not to focus too much, but I just wanted to show you guys when it talks about data centers. So here, Amazon to spend 12 billion in Louisiana on AI data centers. I just thought that was wow. Just in Louisiana alone, 12 billion on AI data centers, and companies. Yeah. And the company's AI spending is expected to balloon to 200 billion this year, more than any of the other hyperscalers. And the data center campuses will be in Caddo and Bossier parishes in northwest Louisiana. Wow. Look at these. Look at this picture. It's just absolutely massive. Massive. Yeah. 12 billion in Louisiana to power AI, and Amazon said it expects to create 540 full-time jobs at the data centers and support about 1,700 other roles that will serve the site, such as electricians, HVAC technicians, and security specialists. Amazon announced earlier that it expects to invest 200 billion in capex. Yeah, which the other hyperscalers will invest 700 billion in 2026 on their expenditures. I just thought that was a huge number, and I just wanted to show you guys that. Look at this. Amazon's biggest AI data center comes online, powering Anthropic without NVIDIA. Look at this. Wow. And this is it. Amazon opens $11 billion AI data center in rural Indiana. Wow. Just absolutely incredible, right? And then, for example, let's do this. We can take a look at Amazon. Let's do that. Amazon. Amazon. Yeah, let's take a look at Amazon. All right. Dun, dun, dun. Again, so here we are looking here at Amazon. We got this on the 1 day. Here, if we bring this over, so this is on the 1 day time frame, and we look here at the RSI, right there. RSI is sitting at 37, and you see it just rebounded. Look at the price chart. It also just rebounded right there. It went all the way down to right there to 23 before it came up. That's why I say these the 30 line and the 70 line, these are just guides. And remember, they can stay overbought and oversold a long time before they ever market correct. So keep that in mind. And here you look at the MACD again. Right here is where the MACD crossed over and went down. And here you see it's a little bit delayed already. It hasn't even crossed over yet. So yeah, let's go here to oh, look, here's the double top right there, and you can see the double top, and you can see the neckline right there, and yeah, there's the breakout going right straight down. So that's an interesting one. Look at that. Look at that. So bum bum bum. Yeah, right there. And let's see, what other ones can we see? You'll be able to see different patterns when you adjust the time. Like, for example, what do I mean by that? If you go here to this one, here's the reverse head, here's the left shoulder, here's the right shoulder, here's kind of like a diagonal neckline right there, and here's a little bit of a breakout. So right here, you have kind of so you have a reverse head and shoulder there with a little bit of a breakout. Let me type that for you. Type that. Reverse head and shoulder, diagonal neckline, and it did break out a little bit, break out right there. Yeah, so there's that. Yeah, now let's change this to 1 minute and see how that changes things. Bang, everything looks different, right? I'll go right over here. Everything looks different. Everything looks different. Yeah. Here you can see some patterns that you didn't see before, and other patterns will disappear. Here we go. There. Here's your double top right there, and again, here's your neckline, and then it does go down a little bit. Also, here's a nice. Let's see. Basically, yeah. Here. Here's the head, here's the left shoulder, the right shoulder, and then here is the neckline, and you see it does break out a little bit right there. Yeah, but you wouldn't see that on the different time frame. That's why it's always important to do a different time frame so you can see this stuff. Yeah, and then here we go. Right here. Yeah. Here's one right here. Reverse head, left side, right side. But it doesn't. Here's the neckline. It doesn't break out, right? It doesn't go down. So this is a no breakout reverse head and shoulders, right? So keeping that in mind. And then go here. Yeah. What else can I show you? Well, that's enough. Let's go to the Amazon here. Let's go back to the front part of it, and let's go back to 1 day. Switch us back to 1 day. So here, here, yeah, you can see how kind of there's a lot more trading right now because there's a lot more volume. Volume-wise is at 5.4 million. Market cap is at 2.2 trillion. And let's go here to earnings-wise. Earnings, Q4 was it just Q4, just missed the expectations. Q3 beat expectations, and so did Q2. And then if we go here to annually, 2025. Surpassed expectations. See, even if you have a bad quarter or something like that, you look at it annually overall, it'll still be better. Yeah. And then 2024 also beat expectations. 2023 also beat expectations. So for Amazon, the last 3 years all beat expectations. So that's just one piece of information that tells you that the company might be doing pretty good. And here, if you go here to statements, hit the annual button. Yeah, Amazon, the last 3 years, 2023, 2024, 2025, for total revenue, gross profit, operating income, and net income, it's all in the green, all looking good for that. So Amazon's looking good, and Amazon is spending a lot of money on their data centers, so that's also interesting. Now another one I wanted to show you here was, Tesla, SpaceX. Let's talk a little bit about Mr. Elon Musk. And why are we doing this? Because Elon Musk has a huge IPO coming up. For example, SpaceX could raise as much as $50 billion in a U.S. listing that would potentially lay the foundation for IPOs of AI companies like Anthropic and OpenAI coming up. With Musk's rocket and satellite maker eyeing a June debut, it and other potentially massive deals threaten to dominate investors' attention. and pressure companies weighing relatively normal sized IPOs to work around them. Yeah. Um, and then also, let's see what else. Yeah. Tesla. This is another reason why Tesla's in the news because they're suing the California DMV because they won't reverse the ruling that the company engaged in false advertising on their self-driving capabilities. So I thought that was kind of interesting as well. Tesla is suing California's Department of Motor Vehicles to reverse a ruling that found the automaker violated the law by falsely promoting its car's self-driving capabilities. Interesting, right? The suit comes 2 months after the state's office determined that Tesla engaged in false advertising and said that the DMV could temporarily suspend the company's licenses to manufacture or sell cars in the state. The DMV instead asked Tesla to clean up the marketing language, but Tesla, which is banking much of its future on robotaxis, wants the DMV to go further. Yeah. Anyway, thought that was interesting. Just wanted to share that with you guys. If you like these articles or like what I'm sharing, put something in the comments for me and let me know that you like it. Let's go here to Home Depot. Why am I looking at Home Depot? Because its earnings are doing good, despite the fact that the demand for projects remains pretty slow right now. Their sales fell, but it topped their expectations, Wall Street's earnings and revenue expectations. So the earnings fell, but it was still better than the expectations for the earnings and revenue that Wall Street had. The company is dealing with slow housing turnover and higher interest rates that have stalled some of the major projects. They posted a roughly 4% quarterly sales decline as a sluggish real estate market and selectively spending homeowners continued. Let's look at Home Depot right here. Dun, dun, dun. Home Depot right here. And if we turn, for example, Home Depot's fourth quarter earnings. Just looking at the news on TradingView, Home Depot's fourth quarter earnings reached $2.72 per share, surpassing the forecast. So let's take a look right here. Here, if you're looking at RSI, right now the RSI is super neutral right there at 56.57, and you can see kind of that's being reflected in the price chart. It goes down, it goes up about the same amount, and that's why you see the RSI kind of being right there. Now what's the MACD doing? The MACD, you can see right here also is just kind of horizontal on the signal line, but when it goes down, you see it go down right there, and also when it goes down here, you see it go down right there. So that's pretty indicative right there. Looking here at for example, it does lag though. Look right here, it crosses going up there when it should have been over here. And here you kind of see a bit of a double bottom right here, and here's the neckline, and so you see the double bottom, and then it does go up like that, and then you see that bang right there. Also here's another double bottom for you where you can see the price trend here hits that, it's that, and here's the neckline, and you can see it just go up like that. Right there. And then, for example, this looks to me like it's shaping up to be a what is it? Let me change this. Let's change the timing on this so we can see different patterns. Look at this, everything changes. Yeah. So what do you got? 1 minute here. What are the other patterns that we can see? See, on 1 minute you see many different things. Let's go back to let's see, 1 hour. Yeah, 1 hour things look different. Let's go back here to 1 day, and you'll be able to see. Yeah. Oh, here's a good one. Let me show you this one right here. If you go here, yeah, this is an exciting one because right here, now you can see. Yeah, it just jumps out of me right here. Here's the reverse head. Here's the left side, right side, and it does. This one breaks out. This is a nice one. So you can see the reverse. Let me type that for you. This is a good one. You have reverse head and shoulders. Nice neckline with breakout right there. Nice neckline with a breakout. And let me see what else we got here. Oh, also here's your double top, showing the chart pattern going down. You see how it's going down. Here's the double top right here. Double top, bang, bum bum bum, and here. Yeah, here's also reverse head and left side and right side. So here's the neckline, and it does break out a little bit, but not too much. So this one just has kind of a let's call this a small breakout. A small breakout right there. Small breakout right there. And then let's see what else we got going on here. Yeah, so that's enough chart patterns for now, but you get the idea. Kind of some fun, cool stuff. Yeah. Also here, like you saw this one, this is the double top. Let me label that for you. I guess I could. This is a double top. Good neckline. And then, yeah, good neckline. You can see this neckline right here. Yeah, it's good. And then here, let's go over here. Yeah, you can see here, basically, you've got some bottoms right here. Here's the bottom, here's the bottom, here's the bottom. Yeah, and then basically here, oh, this is a good, here's your head, here's your left side, here's your right side, and then here's your, basically, yeah, your neckline right there. So, not all Head and Shoulders are going to be clear and easy to see all the time, but that's a pretty interesting, pretty good one right there. So, look at that right there. Kind of a hunched, yeah, Head and Shoulders right there. There's that. So let's go over here. There's some good chart patterns. Looking at Home Depot, volume-wise is at 1.06 million. Market cap is at 385 billion. If we go here to earnings-wise quarterly, Q4 beat expectations. Q3 missed it. Q2 also missed it. But annually, what we got for annually? 2025, yeah. Annually, 2025 beat expectations. So did 2024 and so did 2023. So all 3 years beat expectations. So it's good, even though you had a couple bad quarters. For the year, earnings were great. That shows strength. Hit the annual button there. This is interesting because you've got 2024 was not a very good year for net income or operating income, but it was good for total revenue and gross profit. Now, if you look at 2023, it wasn't good for anything. You know, the total revenue, the gross profit, operating income, net income is all bad. all in the red. Now, if you look at 2022, this year was good for everything, So yeah, really that was kind of interesting. So that's Home Depot. Now why do I have this up here? Because I make the point here about how robots may outnumber workers in a few decades as the firms ramp up their investments. This is interesting because we talk about AI and how much things are changing, and how much AI is going to be able to do compared to people, and what jobs are people going to have in the future. AI robots will exceed the working population within a few decades as more firms adopt AI agents and continue to squeeze costs. Yes. Now that's why I highlight this, because Amazon is squeezing costs and moving to AI by laying off like 16,000 employees. And that's their second round of large-scale layoffs. And in October, announced it was cutting 14,000 corporate employees to change quickly as AI upends the technology sector. And then here, Amazon is America's second largest private employer behind Walmart, and has over 350,000 corporate employees, according to 2024 survey filed. And so, keeping that in mind, that's why I brought up this article. When you marry or bring together profitability with technology progress, we have the biggest trade in history coming, which is basically that artificial intelligence will be able to do more, better, cheaper, and substitute for people. So look at this. It said that increase AI robots ranging from humanoids to domestic cleaning robots, autonomous vehicles are forecasted to increase to 1.3 billion by 2035. The number of AI robots would quickly increase to over 4 billion. For example, a $15,000 robot would break even in just 3.8 weeks for a $41 an hour human job, or 21.6 weeks for a $7.25 human job. Meanwhile, a robot that costs $35,000 would have a payback time of 8.9 weeks for a $41 an hour human job. You can already buy a humanoid today, which gives you a payback period versus human workers of less than 10 weeks. So, yeah, it's just business. Why wouldn't you get robots? 80% of leaders expect AI agents to be largely integrated into their AI strategy within the next 12 to 18 months. That's fast. AI agents are a type of software program that can make decisions and complete tasks without much human direction. That's fun. Wow. That company currently employs 20,000 agents alongside 40,000 humans. Wow. So again, Elon Musk said that AI will likely surpass human intelligence by the end of this year. They will actually make so many robots in AI that they will actually saturate all human. There will be an abundance of goods and services, because my prediction is that there will be more robots than people. Musk said. Wow. Imagine this. So, put it in the comments. Is this a good thing? Is it a bad thing? What jobs are people going to have if everything is done by AI and robots? What's everybody going to do, right? Let me know. And if you guys are enjoying this kind of content, if you're liking the technical analysis, if you're liking the fundamentals, let me know. Say hello to me, and let me know what you like or dislike. And thank you very much, and see you next time.